In our previous video, we have seen how to prepare revaluation account. And now in this video, we will see how to update partner's capital account and prepare a new balance sheet at the time of admission of a new partner. So let's continue the same question. So in this question, first we will update the partner's capital accounts. And for this, first we will write the opening balances of partner's capital by balance brought down. And these balances you will get from the balance sheet which is given in the question. So capital of X is rupees 65,000 and capital of Y is rupees 45,000. Now we will record the capital which is brought in by the new partner, and here the new partner is Z. So let's see how much capital he brought in. So he introduced rupees 60,000. So the entry for this 60,000 is cash account debit and Z's capital account credit. So in the partner's capital account on the credit side we will write by cash, and the amount is rupees 60,000. After this, we will distribute this undistributed losses between the old partners. So profit and loss account, and the amount is rupees 10,000. This is undistributed losses. And due to this, the balance of partners capital account will decrease. So therefore this loss we will record on the debit side to profit and loss account, and the amount is 10,000, and as both are equal partner, so both will bear 5,000. Now we will see, we already prepared the revaluation account, and the result of revaluation account is a loss. So this loss also we need to transfer to the partner's capital account. And with this loss, what we will do, we reduce the balance of partner's capital account. And for that, we will record this loss on the debit side. Revaluation. So X will bear 1600 and Y will also bear the same amount, 1600. As they were equal partners. Now once this is done, now we need to solve the goodwill point. Now here in the question it is given that goodwill of the firm is valued at rupees 30,000. So let's see how to solve this point. So the value of the goodwill is 30,000. Goodwill is rupees 30,000. Now first we will compute a new partner's share in this goodwill. Z's share. So 30,000, and as he admitted in the firm for 1/3 share, so his share in this goodwill will be rupees 10,000. Now he is supposed to bring rupees 10,000 in the firm. And in the question, nowhere it is mentioned that he is bringing rupees 10,000 or he is not bringing that amount. So we will assume that he is not bringing that 10,000, which is his share in goodwill. So what we will do, as he is not bringing this rupees 10,000, so with this 10,000 we will reduce his capital, and for that we will debit Z's capital account. But as per ISC guidelines, rather reducing Z's capital, we need to consider Z's current account. So we will debit Z's current account instead of Z's capital account. So Z's current account debited with rupees 10,000, and we will increase the balance of the capital of Mr. X and Y. So to X capital to Y's capital, and this 10,000 we will allocate between X and Y in their sacrifice ratio. Now their sacrifice ratio will be 1:1, because in the question it is only mentioned that Z admitted for 1/3 share, but nowhere it is mentioned that Mr. Z got this 1/3 share in which proportion from X and Y. So we will assume that X and Y gave this 1/3 to Mr. Z in their old share, that is 1:1. So therefore the sacrifice ratio will be 1:1. So this 10,000 we will allocate in the sacrifice ratio, that is 1:1. So the balance of X capital will increase by 5,000 and the balance of Y's capital also will increase by 5,000. Now let's see the posting of this entry. Now here in this entry, X capital and Y's capital both are credited. So on the credit side I will make the posting by Z's current account. So 5,000 in the column for X and 5,000 in the column for Y. Now what about this Z's current account? So this Z's current account we will show in the new balance sheet on the asset side as a debtor, because he is unable to bring rupees 10,000 in the firm. So we will show Z's current account in the new balance sheet on the asset side as debtor. Now after doing all adjustments, let's find out the balance of partners capital account. So the total of credit side for Mr. X is 70,000, and let's see for others. For Y it is 50,000, for Z it is 60,000. Now same amount I will write on the debit side in order to get the balance. Now to balance carried down. Now from this 70,000 I will subtract these two figures. So the updated balance of X capital account is 63,400. And now let's see for others. So we got this updated balances of partners capital account. Now the question is, we need to maintain these balances in the profit sharing ratio. So for this purpose I will transfer these balances on the second part on the credit side by balance brought down. This is the second part of the partners capital account. So 63,400, 43,400 and 60,000. Now on the basis of Z's capital account I need to adjust a capital of X and Y. So the overall objective is to maintain partners capital account in the profit sharing ratio. So let's see how to execute this. So here we will do working. So Z's capital is 60,000 at present. Z's share in the firm is 1/3, and on the basis of this Z's capital and Z's share in profit, first we will find out firm's capital. So for that what we will do, we will take Z's capital and we will multiply this Z's capital with the reverse of Z's share. So right now Z's share is 1/3, so reverse of it will be 3/1 in order to get the firm's capital. So firm's capital is 1,80,000. So once we reach this, or once we get this firm's capital, now we will allocate this firm's capital in the new profit sharing ratio, and the new profit sharing ratio is 1:1:1. So 1,80,000 multiplied by 1 and divided by total of ratio is 3. So 60,000 and 60,000 for Y also and 60,000 for Z also. So this is the firm's capital allocated in the new profit sharing ratio. So it means the capital of partners should be now 60,000, 60,000 and 60,000. Now after getting this, we will compare this new capital with the existing balances. So here see, X capital is 63,400, whereas we need to maintain X capital only rupees 60,000. So here X capital is in excess of rupees 3,400. So what Mr. X will do? Mr. X will withdraw this 3,400 in order to keep his capital only 60,000. So what he will do? He will withdraw this 3,400, this extra capital, and once he withdraw the money, the balance of his capital account will decrease. So we will put that withdrawal on the debit side. So on the debit side, we will write to cash 3,400, and the balance left is 60,000 now, and that's what we need now. Now what about Mr. Y? Mr. Y's capital we need to maintain at rupees 60,000, but at present his capital is only 43,400. So it means his capital is not sufficient. So it means with Mr. Y needs to bring, or Mr. Y needs to introduce rupees 16,600. So he will bring the money rupees 16,600, and we will increase his balance once he gives the cash. So 16,600 I will put on the credit side. And for Z, we have nothing to do because already his capital is at rupees 60,000. So the final conclusion is, in order to maintain partners' capital in profit sharing ratio, Y needs to introduce rupees 16,600 and X will withdraw 3,400. Now let's find out their balances. So 63,400 and minus 3,400. So X capital is 60,000 and Y's capital is also 60,000, because on the debit side there is nothing to subtract. So Y's capital is also now 60,000 and Z's capital is already at rupees 60,000. So I hope you understood that at the time of admission of a new partner, how to adjust a partner's capital in the profit sharing ratio. Now we will update the balance sheet after Z's admission. So let's see how to prepare the new balance sheet. So for that we will take help of the old balance sheet which is given in the question. So the first item in the balance sheet is cash. So same cash we will write here, but the figure will change. So already we had 3,000. Then Mr. Z introduced 60,000, so that we will add here. Mr. Y introduced 16,600, so that we will add. And Mr. X withdrawn 3,400, so that we will subtract. So the available cash will be 76,200. Now we will show debtors. So debtors amount is, as per old balance sheet, 1,14,000, and from this we will subtract the provision. So provision already we created with 5%. If you see the first point, so 5% of this is 5,700. So now the net realizable value from debtors is 1,08,800. After this we will show the stock, and the stock value in the old balance sheet it is 55,000, and we need to reduce the stock by 10%, so 5,500. So the new value of stock will be 49,500. Next is investments. Investments value we need to increase by 14,000. So the old value was 60,000 plus 14,000 we will add. So the new value of investments will be 74,000. Next item is furniture. and furniture value we need to reduce by 25%. So 8,000 and its 25% is rupees 2,000. So 8,000 minus 2,000. So we will show furniture at rupees 6,000. And this P&L account will not come in the new balance sheet because we already allocated this profit and loss account between the old partners. So now see the liability side. This is our asset side. Now see the liability side. So liability side we will show bank overdraft. There is no change in the value of bank overdraft. Then we will show creditors. Creditors also there is no change in the amount of creditors, 70,000 as it is. Provident fund. So the old value of provident fund was 13,200, and as per point number 6 we need to increase this provident fund by rupees 4,000. So we will add that 4,000 here. And now we will show balance of partners capitals. So capital of X is after adjustment rupees 60,000. Capital for Y is also 60,000 and capital for Z is also 60,000. Now let's see the total of the balance sheet and hope it should come equal. So liability side we got 3,24,000, and now let's see the asset side. 3,14,000. It means 10,000 less. So let's see where we missed rupees 10,000. Yeah, I got it. We missed that Jet's current account, as he didn't bring the money rupees 10,000 which he is supposed to bring. So that 10,000 we will show here. So now let's see the total again. So finally we got the total which is equal to the liability side 3,24,000. So enough in this video. So see you in the next video.